All right. Hello, everybody. Welcome back to another episode of Sunday Market Futures. We are getting ready to enter the final week of trading for March, and then we'll be done with March, and we will officially be getting into the fourth month of the year. Yeah, this is the final week. So next week we have March 31st, then we have April Fool's Day, and then we are officially into April trading. Kind of a slow weekend in terms of news, nothing too crazy. There's a couple of core headlines I want to talk about. We did have some market events happening this morning, a couple things on Saturday, had some geopolitical macro stuff happen. I don't know if it's going to have that much of an impact on the broader equity markets tomorrow, but hopefully, based on how futures are looking, things are going to be a little bit better than that. We're in about 14 minutes. We will have the overnight markets opening. I think we'll have a continuation of the momentum we saw on Friday because we're green, up 0.5% across the NASDAQ, Dow Jones, S&P 500, and small caps as we enter into overnight trading. Now, we'll see if this can actually hold itself, but it's been green for the past couple hours. Hopefully, overnight markets continue with some of that green. We saw some really good momentum on Friday. You had Robinhood close at above 44. You had Palantir finally touch $90 after a month. You had Tesla go back to 250. A lot of updates to talk about in terms of Tesla over the weekend, so we'll discuss that as well. And so hopefully this momentum can sustain itself. Last week we had JPOW, we had the FOMC press conference, we had macro data around jobs. Everything happened the way it needed to happen. I would say the biggest catalyst last week is that Trump did not speak about tariffs until Friday. And then when he spoke about tariffs on Friday, actually what got the markets to also get a little bit more green is he said the United States is willing to be quote unquote flexible on tariffs. Now you could read into that, not read into that. The market definitely felt there was something around that word flexible. Maybe April 2nd, it's not as bad as people think it is, but the April 2nd tariff overhang is still a cloud that we all have to watch out for. And hopefully this week we'll get some more data and updates on what is going to happen to the markets based on tariffs. So yeah, nothing too crazy, but we will definitely discuss a bunch of different topics and then we'll keep going from there. Thank you everybody for being here. Cole, what's up? Spencer, June, Derek, what's up? I'm Beneficial, Gene, Uzi, Midwest, Nacho, Futbucker, what's up, man? How you been? Thank you for being here. Cortland, Jumpman, Mrs. KM, Green, Trump, hold my Coke. Yeah, we're green for now. I always say for now when it comes to futures because we've seen futures flip so many times, but hopefully they can sustain themselves. Jake, what's up? Sam, what's up? Kieran, thank you all for being here. What did you guys do over your weekend? My weekend was pretty boring. Didn't do anything too crazy. My cousin came over from California. She's spending a couple days with us on the East Coast for spring break. So I think she's 23. She's 23, 24. And so she's originally from India, but she moved to America a couple years ago. I was trolling her this morning because I went to pick her up from the airport. And I was like, so did you fly United? And she was like, no, I flew Spirit. And I was like, oh, that's she has a nice little tech job in California, but I got her into the markets. She was one of the cousins that I talked to deeply about in October when I went to India. And she wanted to get into the markets, but I kind of gave her the nudge of like, all right, it's time to get into the markets. And everything was great in mid-February. And then she took a nice little 20% haircut. And so she flew Spirit, which I can't blame her for. I didn't know it got that bad to have to fly Spirit because I've been through that phase of life where I have to fly Spirit. I am hopefully never going back to the phase of life where I have to fly Spirit. I've been in that phase. It's not a fun phase. You feel like your spirit might have a chance of, going higher into the sky, hopefully above you, not below you when you're on Spirit Airlines. So I think I'm done with that part of life. We'll see. Hopefully, the stock market doesn't get that much worse, but yeah, this is like her first real correction that she's dealing with. She's never really seen a correction. She was not around in 2020 or 2022 or anything like that. So yeah, she is definitely feeling some of the pain. Futbugger says Spirit Airlines practically charges per nutsack. Yes, exactly. Exactly. Like, I'm just not doing it, bro. I'd rather overpay for a flight, even if it's like another extra $100. Like, I'm just not doing Spirit. I've done that before, and it's not like more than 2 hours on Spirit, and you're kind of just like, what is going on, dude? What's happening? Michelle says, Ray and I went out for fajitas for lunch. It was nice. They had mariachis there today. That's awesome. I actually, we took her out to dinner as well. I went to Texas Roadhouse, and I took a picture of my steak to Steve, and his only comment was that at least the fries look good. Ladies and gentlemen, that is a medium well steak. and it tastes great. Medium well. Medium freaking. There's no blood. There's no hemoglobin. There's no red. It's pure steak. I'm dying on this hill that medium well is the way. I'm not even doing it to be contrarian. Like, I had medium rare, I would say 3-4 times at a steakhouse. Then I tried medium well. Life changed. And I really do think one of my missions that God put me on this earth for is to convince the world that it's medium well. It's not medium rare. You guys that are saying gross in the chat, you haven't tried medium well. You haven't tried medium well. You really haven't. And I wish people would just be a little bit more open-minded. I really wish. But unfortunately, you have been brainwashed by this propaganda around medium rare. Bullish Jake says accounting homework and chest presses. I love it. I remember accounting homework back in college. Yeah, I let's just say I had a friend who helped me out with a lot of that homework. So, all right, cool. I think we'll get started. That looks like it was bought at Walmart and heated up in the microwave. Dude, you guys are disrespectful. A, to Texas Roadhouse, which is a fine establishment. B, to medium well. It does not look like it came from Walmart. What are you talking about, bro? Maybe the picture is not the best, but this is a good steak. It's a great steak. Steve was like, oh, the fries look good. I was like, this guy, bro. By the way, Steve has turned into a degenerate gambler when it comes to this NCAA stuff and the March bracket. And you know who else turned into a degenerate gambler? Freaking Jason. This guy's Twitter feed is just him screenshotting all his trades on Robinhood. I mean, Robinhood's going to be printing. Now, I did win the Florida game because he told me to bet Florida. And so I trusted him because he has a friend who told him to bet Florida. So I made like $30 today, which I'm happy about. But still, look at this. 5 posts in a row. This guy's just trading freaking basketball games. He told me to buy the dip on Duke, bro. I lost my shit when he said that. He said, yeah, if Duke is down, buy the effing dip on Duke. I was like, there's no way he said buy the dip on Duke. I think Robinhood's going to make a lot of money off this, bro. A lot of money. So we're going to see. We also have the gold event next week. I'll be in San Francisco with Tanner and Roy. I'll be there on Tuesday. The event is on Wednesday. So it should be fun. And hopefully we all get to do a stream together. And we get to see what Vlad has been cooking up for us for this new gold event. All right, cool. So let's get into what's going on in the broader markets. We got about 7 minutes until the market opens. I think we'll start off with, well, let's start off with this and get this out of the way. I hated seeing this morning. It was pretty annoying to see it, but Trump shilled his own meme coin. He said, I love Trump, so cool, the greatest of them all. I mean, for all the people that think I love Trump, I mean, here's hopefully a little bit more objective criticism. I hate this stuff. I hate it so much, dude. Like, this is absolutely unacceptable. This is the worst thing in the world. I cannot believe a sitting president who knows he has presidential immunity is putting shit out like this. And it's just disgusting. Like, what more can you say? It's absolutely, is he going to get investigated for it? No. Is there going to be an ethics committee that comes after him? No. Like, it's like nothing's going to happen, and he knows nothing is going to happen, which is a sad part. But yeah, this is disgusting. There's no way to justify it. I think anyone who justifies this is mentally insane. A sitting president of the United States cannot be shilling a meme coin and convincing dubious people to buy something that has zero intrinsic value. And I'm not saying the meme coin shouldn't exist. I'm saying the president of the United States of America should not be pumping it. And that's what we got going on. He's giving crypto a bad look, 1,000% giving crypto a bad look. Now, this thing pumped 12% when he did announce it. So it did at least pump when he announced it, but his pump has not been enough to sustain itself. It's up 7% for the day, one of the better days it's had over the past couple of weeks. But even with him pumping it, I don't think it's going to be enough to save this coin because it's a pile of shit. Like, it is what it is, right? So I don't think his pumps are going to be enough, but it is sad to see that's happening. Now, something else that happened today that I think was a bit more important is Tessie. So apparently the Model Y, not the new one, the old one, but like not a used version of it, but the old 2024, the Model Y that I have, Tesla is getting rid of their inventory at a lot of dealerships, and certain ones in New Jersey are taking off. Look at this, $7,870 per Tesla, per Model Y. Now, initial thought on this was like, oh, this is bearish. They're like really trying to clean out the inventory. They don't have enough demand, yada, yada. And so like they're making these egregious price cuts to get people to start buying. The other interpretation of it is that they're literally just clearing out the inventory because they have so much demand for Juniper. Sawyer Merritt right here posted that The new Tesla Model Y inventory is now completely sold out in Texas, Michigan, Ohio, Illinois, Georgia, Utah, Virginia, Alabama, et cetera, et cetera, et cetera. So the new Juniper inventory has been sold out everywhere. And that's good. Question is, how much is that going to reflect on the overall deliveries and sales? But the old Model Y, performance all-wheel drive, not a bad car at all, is been cut by a decent amount. And this doesn't even take into account the $7,500 that you get on the EV tax credit and the $2,000 in New Jersey that you get off. If you live in Colorado, it's like a ton of more discounts that they give you for being in the Northeast. So I am seriously thinking of getting my dad a Model Y. He's been waiting to get into it. He saw the price cuts today and he got really excited for it. So I don't know if it's going to happen, but yeah, if you just type in Model Y in your location, it might not be in New Jersey has a ton of Tesla dealerships. And that's why I think there's so many discounts. Maybe if you're in a different location, you're not going to see that much inventory being sold. Even like inventory lots that have like 1,000 miles on them that have been driven for demos, those are being discounted and Tesla's selling them as well. So the EV tax credit was not removed yet. Trump said he would remove it, but it hasn't happened yet. If you see on the website, they still give you the $7,500 point of sale pricing reduction that you can factor into your overall cost. So now they're not giving you 0% APR. You still have to pay 6% APR if you put like 5 or 10,000 down, but it's not a bad deal, bro. It's cheaper than my Model Y when I bought it. So I mean, I think look, if you've been, I don't get anything if you buy a Tesla, right? But if you've been thinking of getting a Tesla, the only thing I can say is one of the best experiences ever in terms of a car. And this might be these are objectively the cheapest prices I've seen. Now you don't get some customization, like this is stealth gray. You're not going to get your perfect color, right? Or else you're going to have to pay more if they have that in inventory. So like, I didn't see any blue Model Ys near me that also had a black premium interior that had this $8,000 price adjustment, right? So you're going to have to be a little bit flexible in terms of the type of Model Y you want, but still, maybe this is bullish for Tesla towards the end of the month, getting their final delivery numbers. We know Elon had that all hands meeting last week. To me, I thought it was desperate. However, it does feel like it maybe pumped up a little bit of the stock. And so if that's the case, hopefully that can reflect in Tesla's Q1 sales. In terms of Bitcoin, we do have some momentum right here. Not really sure why Bitcoin's gaining some steam, but we are at 86. That should be great for Robinhood when we open. Same with MicroStrategy as well. We're going to be opening in 2 minutes and see what ends up happening. And we'll keep going from there. Tesla car insurance is going to be $5,000 a month. It is not. If you use Progressive, which at least in New Jersey has very good rates on Tesla, Geico has horrible rates. So if you have a Tesla in New Jersey, I wouldn't get Geico, but Progressive is amazing. It's nowhere near $5,000 a month. So yeah, the insurance actually is, I was worried about the insurance when I bought it in November too, but then it's like not bad at all. It's like a regular car, to be honest. But again, it depends on your insurance provider. But yeah, there's really no other hesitation. My dad's been thinking about this Model Y for a while. Every day he asks me, what the prices look like. And then finally today, I think he saw an article that so many were slashed by like thousands of dollars. So maybe we'll have 2 Model Ys in the house. We'll see. But we're gonna hopefully end up getting him this because I want him to get one, and now it's just a question of if the price is going to be the right time to get one. 30 seconds until we get these overnight markets to open. I think we're going to open pretty damn green unless anything changes from what we're looking at in futures, which is exciting. It's also a little scary because it's like, can you really trust it? But if April 2nd turns out to be a nothing burger, maybe this is the beginning of the seasonal rally, which we've looked at multiple charts over the past couple of weeks, and April or end of March mid-March tends to be the bottom, which is literally what happened at 549 on the S&P. And then you tend to get a pump going into April, May, June. So going to see if that ends up playing out. All right, overnight markets are open. Palantir 91.45. Palantir's up 0.5%. Let me just pull this up right here. Okay, cool. So Palantir right here is up 0.5%. Hoodie is, I think it's going to be up 0.5%. Hoodie is up 1.44%. Never mind. $45 back to 45 on Hoodie. SoFi is up 1% to $13. GameStop is up 2%, 25.25. Reddit is flat. Rivian is up 0.5%. Hims is up 1%. PayPal is up 0.5%. Tessie is up 1%. Ladies and gentlemen, 251 on Tessie. The momentum has caught up after that bottoming, at least so far, at 215. Google's up 0.5%. Amazon's up 0.5%. Nvidia is up 1%, 118.85. Meta is up 0.5%. Carnival Cruise is up 1/3%. They had a great earnings on Friday. Celsius is relatively flat. The Qs are up 0.5%. S&P 500 up 0.5%. Boeing up 1%. You've got Archers up 0.5%. MicroStrategy's up 2.8%, back to 312 on MSTR. D-Wave Quantum, that did get hit last week after some of the Jensen comments, is up 1.67%. Super Micro is up 1.47%. You got Verizon that's flat. You got Oracle that's up 1%. FedEx got hit last week. Let's see FedEx. That doesn't trade overnight. SoFi, wow, 1.7, 1309 on SoFi. Palantir, 1.45, 92. We are green. We are green. Hood's got to be above 45, right? Hood. Yeah, there you go. 45.35 on Hoodie. 2.23. Now, look, this makes me excited, but it also makes me a little queasy because I don't know. I don't know if we trust this, but I want to say yes, we do trust it on the assumption that April 2nd is not going to be that important. Now, if the 10-year spikes, that's going to create some short-term problems, even if April 2nd is not that big of a deal. 4.273, we're slightly up on the 10-year, so 10 years up. But then again, if the whole point of April 2nd is to have tariffs, which are inflationary, and we don't have any tariffs, which, again, I'm skeptical of, but let's say it's not as aggressive as we thought, maybe the 10-year goes down based on the idea that we have less inflationary policies entering into the system, potentially. That could be a bull case for the 10-year. 85.99 on Bitcoin. SoFi right here, 13.10. PayPal, 0.87%. Let's look at some of the other crypto names. Coinbase is up 1.46%. The Mag 7s are all green, all of them. Amazon, Google, Meta, Microsoft, Apple, Tesla. Tesla's up 2%, maybe 254. Apple right here, 0.3%. And then all the semis are green as well. SMCI, AMD, NVIDIA, Intel, Broadcom, Qualcomm, TSM, Marvell, ARM, Lam Research, Dell, and Micron, all of them up about 1%. Rocket Lab is not overnight. Rocket Lab is in the European markets, though. Let me see. Rocket Lab, Germany, price. Rocket Lab is, it looks like down 0.59% in Germany. I could be wrong on this. Someone could correct me. But it looks like it's slightly down. March 23rd. Actually, no, it's up 2.21. No, it should be up 2%. It should be up 2%. International should be up 2%. I believe it should be up 2%. But yeah, it doesn't trade overnight on Hood. Harley, think of the $5 super chat. I seen that IPO on Hood. Could you explain it? Thanks. Yeah, so CoreWeave is going public, and I think they're going public in the next couple of weeks. So Hood is offering the CoreWeave IPO. So that's why you see it on your screen. It's CRVV. I am not touching this IPO. I read through their S1. The S1 is the document that all companies publish when they go public. It's going to be priced at $47 to $55. I didn't like, you guys probably don't like my battery. Dude, I'm living on the edge constantly. How much is this? It's 3%, dude. It's always about to die. But I don't like that 62% of CoreWeave's revenues, even though they are growing something like 5x year over year, are from Microsoft. I think that's a little concerning. The IPO can still do very well, but I don't know, dude. It's just like they're very reliant on one company for the majority of their revenues. This is a semiconductor name, or it will be a semiconductor name when they IPO around cloud infrastructure. But I don't know. I feel like they're relying way too much on Microsoft. And so to me, that's a little bit of a, I'm going to wait and see how the IPO does. I also don't know if this is going to be the first major IPO in this market in 2025. And we're going to see if it performs, because everyone's been saying in 2024 where the appetite for M&A and IPO is so strong in 2025. Let's see if the appetite is really that strong. Are people going to buy a brand new company when they could buy NVIDIA trading at 24 times? When they could buy Google at 17 times? Like, when you compare the IPO against the Mag 7s that are obviously much better fundamental companies, I really wonder if there's enough demand for IPOs. So we're going to find out when they go public. But yeah, I won't be touching it for now. Oh, the expected IPO is March 31st. So basically in about 10 days. We're going to see. Marathon, let's take a look at Marathon and some of the crypto miners. They are up 2.9%. You have Riot as well. That is up 2.5%. Bitfarms, all those guys up about 1.98%. And then BITX leverage against Bitcoin, that's up 5%. Bitcoin right here, 85.97. I don't know why Bitcoin's pumping. I don't know if anyone saw a headline. I didn't see anything over the weekend about Bitcoin. I don't think I saw anything that could create a reason for it to pump. Sailor. Well, Sailor. Yeah, I mean, maybe this is the reason. Sailor did do his infamous tweet. His infamous tweet is that whenever right before he buys, he says that this chart needs more orange. So he'll probably be buying more tomorrow. That's what he tends to do on Sunday when he makes the tweet, and then Monday he shows the buy. They already bought 11 million last week. I mean, I don't know if there's going to be a massive buy they put in. I don't know if they have the money. They did do that whole new convertible offering with STRK. So maybe they raised some capital there. But that could be one of the reasons why Bitcoin's getting a little bit of a pump. Amid Canada snap elections announced could be bullish for April 2nd because the Libs are losing and this is their best chance. Yeah, but there's no world in which the Conservatives win the Canadian elections, right? Like from what I read, the Pierre Poilievre guy, he's not winning. Like the Liberals are winning, right? I'm totally uneducated on this, but and what is a snap election? Like, are they chatting on this snap election? Is that what they're doing here? Get it? What is a snap election about? Hold on, let's ask Grok. What is this? What is a snap? I've never heard of this before. What is a Canadian snap election? A Canadian snap election is when the Prime Minister of Canada decides to call an election earlier than the usual scheduled date. They can do that. In Canada, elections are typically set every 4 years, but the Prime Minister has the power to dissolve Parliament and trigger an election whenever they see fit. Okay. Think of it as a surprise move in a game. The Prime Minister might call a snap election to catch their opponents off guard. Wait, you can do this? What? Wait, what? Hold on. You can just change the date of the election in Canada? For example, they might say things are going great for us now. Let's vote before anything changes. It's a bold play, and it can either pay off big or backfire if the public isn't on board. So in short, a Canadian snap election is all about timing and strategy. A sudden election called by the Prime Minister to shake things up and hopefully come out on top. They can also happen in England and Australia. I have never heard of a president in the United States snapping the election earlier than usual. Wow. Okay. Well, I found out something new today. I didn't know you can do that. Yeah, it's a parliamentary. That's fundamentally different. Okay, so even with this snap election, I mean, yeah, I guess that could be potentially bullish for April 2nd if the Liberals don't win, but I don't know. I mean, from my understanding, from some of the poll data that I was reading last week, it seems like the Liberals have it in the bag. Maybe the snap election potentially changes that. Wow, hoodie up 3%. We are pumping, folks. But I guess we're going to find out once this officially goes live. GameStop's up 3%, Reddit's up 1.3%, Rivian's up 1%, Nike's up 1%, Tesla's up 2.3%, Block's up 1%, Google's up 1%, Nvidia's up 1.13%. We got some really good momentum here. Palantir's up 2%. I guess we're going to see if we can hold this going into tomorrow, but it is looking not bad. And that's kind of being led by Bitcoin right here, 85.8 currently right now. BlackBerry does not trade overnight, so BlackBerry won't be there. Okay, cool. So that's what we got in the overnight markets. I don't know. The skeptic in me says I don't trust it yet. I really don't. I think tomorrow is going to matter a lot in the pre-markets. But, I mean, it's just continuing what we saw on Friday. And Friday was pretty damn good. So maybe this continuation actually has some legs in it. Okay, going back to Tesla, a couple stats I want to show you guys. So this thing we got from JP Morgan, this stat over the weekend. And I thought this one was interesting. Retail investors have pumped $8 billion into Tesla over the past 13 days, the largest inflow during any buying streak in Tesla's history. This came from JP Morgan late on Friday night. Either you think this is bullish because smart money has become retail in the context of Tesla. Maybe retail essentially right here is saying that they're calling the bottom, right? That's what retail is saying. And either you think that, all right, retail knows what they're doing more than institutional, or retail is becoming real hardcore dumb money. And if retail is becoming dumb money, or they're showing how dumb they are with their money, and buying Tesla before Q1, before some of these automotive sales just might not be good, is like the epitome of buying into the hype. It's either one or the other. Either retail's calling the bottom, and if we do have a bottom, or retail's going to get flushed out on Q1. I don't know what it's going to be like, but we will find out when we get into Q1. I think the all hands meeting definitely got Elon very excited, or definitely got the world, especially retail, very excited. will the Q1 numbers be able to live up to it? I think is going to be the big question. Palantir right here, 92.58. Tesla's up another 2.13%. Wow, Hood, 45.90. Trying to make its way back to 46 overnight. And really, this should be happening for Hood, right? Hood is just a reflection of the broader market starting to feel more bullish. Obviously, everything is bright green, so Hood should be bright green as well. Bitcoin's also pretty green. That's helping Hood. And Hood has a big event coming up this week. So lots of catalysts to maybe get us back to that $50 range. I wouldn't say anytime soon, but who knows if the right catalysts come together, at least maybe holding this 45 level. Elaine, thank you for becoming a channel member. Appreciate you, Elaine. Thank you for being here on a beautiful. Hopefully you enjoyed with the grandkids, Elaine. It was so funny. We called my grandmother this morning in India because we're trying to get her to come to India, or trying to get her to come to America, and so we're on the phone with her in the morning, and my mom's trying to get her to come by the end of June. And my grandmother's like, yeah, but you can't pay for our tickets. You can't pay for our tickets. And my mom's like, don't worry. Amit will pay for your tickets. You're good to go. Like, Amit will pay for your tickets. And it's so funny because in Indian culture, like when you're given my grandmother's generation, a girl could never pay for her for anything, right? So she's like, oh, if Amit's going to pay for it, then it's okay. But like, you can't. Like, my mom is not allowed to spend money on her because, she has those old conservative values. But if I pay for her, if her son pays for her, like if any guy pays for it, she's fine with it. But a girl can't pay for her tickets. So yeah, hopefully she comes out in June. And I saw her back in October, but hopefully we get her back for a couple months here. Okay, so this is another thing that went viral on Twitter over the weekend. So we talked about the $8 billion from JP Morgan going from retail investors to Tesla. Now here's another thing by our very own Garcia, which a lot of you guys probably know in the Palantir community. He's created the most epic memes of this community. He had a post on Reddit that went a bit viral. And he did it as a joke, but my goodness, did this post go viral. So here's what he said on r/Elon Musk hate. I didn't know this was a subreddit, but here it was. Garcia, who understands the stock market, right? This is what he posted. Ready to stick it to Elon and short Tesla? This is how you can make money from Tesla stock going down. Get a brokerage account, deposit as much as you can, go to Tesla, buy put, select June 2025, $100 strike, buy as many contracts as you can. They're only $130. If Tesla's at like 250 now and keeps going down, you're making loads of money straight from Elon's pocket where it hurts him the most. This was hilarious, bro. This was freaking hilarious. And this thing went viral. And look at the tweet. It has 1.1 million views. So it is absolutely hilarious. And it's hilarious for two reasons. Number one, it's hilarious because if you actually take stock market advice off Reddit for someone who is not even in the stock market, like if you're a new participant to the market and you see this random post and say, oh, I'm going to download Robinhood and I'm going to just go start buying these contracts, like, I don't care if you lose all your money. Like, that's on you. Like, there has to be some level of accountability here, right? So it's going to be funny because you might have a lot of people just lose a ton of money buying these puts on Tesla when they have no business buying this stuff, but their hatred of Elon is going to cost them a lot of money. What would also be funny is if Tesla actually collapses, maybe not to 100, but maybe it's like 170, 180, and all those puts are going to print. They're going to print. So it's going to be hilarious either way. Either people are going to lose a lot of money, or they're going to make a lot of money, and Garcia is going to get crucified either way. But it was absolutely hilarious that went viral, and it shows how much the hate of Elon is now trending into people that don't even know about the stock market getting excited about buying puts, even though they probably have no idea what that means, as long as it gets money to leave Elon Musk, which, Tesla's going to have to really collapse in order for that to happen. Now, some people were saying, and this is where I'll defend Garcia right here. Some people are saying, oh, well, he's going to get caught after the SEC, yada, yada, someone's saying the FBI. I don't think the FBI would get involved with it. All these people are like, oh, all these government agencies are going to go after him because he's giving this financial advice, yada, yada. I don't think any of those people have an argument, and I think Garcia should not be worried for 1 second. Because Bill freaking Ackman, Friday night, what time? 8:26 p.m. says to some guy who says why I'm avoiding Tesla. That this is like the post the guy made. Bill Ackman said, all of these arguments are supportive of Uber. You should buy some. I saw this post, and the first thing I thought was, holy crap. These billionaires don't give a fuck about the SEC anymore. because Trump's in office. Like, tell me that it's okay to say you should buy some, literally, like telling him. He's like saying actively, he's not even saying like, oh yeah, you should take a look at this. He's like, you should buy some Uber. That's not what Bill Ackman, Warren Buffett, Stanley Druckenmiller, they're not supposed to say that. Definitely not in public. Or if they say that, it's supposed to be accompanied with some level of a disclaimer. So the fact that he said that to me, Garcia has nothing to worry about. If anyone needs to go after someone, it's the SEC and Bill Ackman. Now, I don't think this comment should have the SEC go after him. I'm just saying that I think we're entering a little bit new of a social media marketplace where the SEC might not be as stringent, because if someone like Bill Ackman, who has a lot to lose, like he has a lot of money to lose, like he has a lot on the line, right, with his reputation, etc. For him to just publicly say it like that, I couldn't believe he said that. And so I don't think the SEC is going to come after him, because I think in Trump's SEC, they just are not going to care that much. But yeah, I don't think Garcia is going to get in trouble, because if Bill Ackman is telling people to buy Uber, I mean, like, you should be able to say whatever you want, dude. Because if Bill Ackman doesn't get prosecuted for that, but like Garcia does because he made a joke, like that'd be just stupid, right? So yeah, it is very weird though, dude. This also reeked of desperation, dude. Like, why is Bill Ackman responding under some random post saying you should buy Uber? I'm just like, what? Like, well, that's just weird. Like this is not how I don't know. But this did happen, and it goes to the point of what this guy was saying, which is just like, look, Uber is going to be a platform to allow FSD or robotaxis to kind of take off at scale. Tesla's going to have FSD become commoditized, which is what RBC said over the weekend when they put out their report. And the NVIDIA OEM collaboration with GM, this was all of his analysis for why to avoid Tesla. And Bill Ackman says, well, Uber is going to be the actual winner. So maybe it does happen, but over the coming months, we'll find out about Uber and Tesla. Zocol says he will be fine. All these politicians, insider trading, and no repercussions. Yeah, so I really don't think Garcia has anything to worry about. But it is hilarious, bro. It is hilarious that people are going to wake up tomorrow and buy $100 puts on Tesla, not knowing what needs to happen in order for those puts to actually print. But it would also be funny if the puts actually print, because what if after Q1 Tesla collapses like 20, 30%? If those numbers suck and all these first-time investors make some cash off Tesla puts. So I guess we're going to find out over the coming months. Elaine says, my first couple million in the market I made was because of a Bill Ackman thesis. He had a good story on Lex Friedman where he said there was a guy who watched him talk about a stock on CNBC. I'm forgetting the name of the stock. But that guy was watching him talk about the stock, and he bought like tens of thousands of shares. And that stock went on to like 5 or 6x or something in the span of like 2-3 years. And that guy somehow got in contact with Bill Ackman, and he just wanted to thank him for literally just mentioning the ticker on CNBC. So yeah, these guys have a lot of influence, right? And now they're using social media to be able to expand their influence. But the fact that he said straight up buy Uber, I'm like, all right, this guy's pretty damn confident or desperate about the state of Uber to be responding under that post. But the point is, he does not think he's going to get in trouble for saying that. So I don't think Garcia would get in trouble either. Okay, cool. So that's what we got in the context of Tesla. I think those were the main Tesla updates. Model Y prices are coming down. Tesla retail is harping into the stock to the tune of $8 billion over the past week, and we're going to find out if that actually ends up working. Robin right there, 45.70. Tesla in the overnight markets is 254. That is up 2.3%. It is now up, I think, 20%. 254 minus 215 divided by 215, 18%. Tesla's up 18% from the lows of basically a week and a half ago. 18% move is not bad, but that's what we had. Sell off on the S&P 500. Let's get a quick take from Ed Yardeni. This is what he said on Friday about where he thinks the market is trying to go, and then we'll get into a couple other headlines from there.
Yardeni Research, good to have you back. Tell us more.
Thank you. Well, I guess if the president's going to be flexible, I have to be flexible. I think we all have to be flexible on where these where this tariff issue is going to take us. April 2nd is Liberation Day. It's according to the president, it's when we're going to have all these reciprocal tariffs. And maybe after all, he is looking at the market. He kind of has led us to believe that the market doesn't really matter that much to him anymore. But I think today's comment about his flexibility on reciprocal tariffs, maybe him kind of watching what's going on CNBC.
Doesn't all this just add to the uncertainty, though? Right? We're asking ourselves as investors the question, does he care about the market? Does he not care? I thought he did. Well, maybe he doesn't. Are we going into a recession? I don't know. They haven't talked us out of it. Are they telegraphing us into one?
Yeah, it's pretty wild. I mean, you need a neck brace to deal with this environment. But all in all, it's kind of starting to feel to me like the market may be trying to bottom out here. Sentiment is extremely bearish. And typically when sentiment is this bearish, you make a bottom. But the reason you do that is that all the reasons for bearishness lead to a Fed put. And I think you asked, you mentioned that I might comment on the Fed here. And I think the Fed did, in fact, indicate that the Fed put is still very much available. It's on standby. The Fed said that, again, they're in no hurry to lower interest rates. They didn't say they're in no hurry to do anything. They didn't say they're in no hurry to raise rates. So I view their position as inherently dovish. They're looking to lower rates. And if we get into trouble, they'll do that. Maybe that will make the bottom. And maybe that'll be sometime in the spring. But meanwhile, my base case remains the same. I think the economy is going to prove to be remarkably resilient. I'm expecting to see some real good bounce backs in retail sales in March and April. I think weather had a lot to do with the weakness in January especially, but also February. So I'm counting on the economy to...
Now, look, as Ed Yardeni says, his base case stays the same. He's kind of saying the truth, but he's kind of not. His base case was 7,000 on the S&P 500. He took that down to 6,400. So his base case about the broader economy is intact because it's always been based on the multiple you put on earnings, and he's not changing the earnings outlook. He's changing the multiple, but he did compress the multiple from 7,000 to 6,400. And I think the reason he did that was to take into account, probably rightfully so, the uncertainty that exists in the market. Now, the green that we're seeing right now is great, but I don't know, maybe it's just a little bit of the volatility has gotten to me, and I'm sure it's gotten to everybody else. But do we ignore all the uncertainties that we had for the past couple of weeks just because we're getting a green couple of days? Maybe, because maybe it means that, we've had enough fear, we bottomed, yada, yada. There's tons of other bottom indicators. But maybe it's also one of those things where your spidey senses should go off a little bit when you're seeing gold as green and saying, all right, let's just be a little patient here. Let's realistically see if we've meaningfully bottomed. Because, again, there are just more uncertainties that the market has to deal with that we haven't fully navigated yet. But at least for now, I think the one argument you could say is that Jay Powell is ready to be dovish, even if he's not going to give us the cut in May. Honestly, unless CPI meaningfully comes down, we're not going to get it in June either. So it's going to be another September cut. But as long as the market knows that at least 3 cuts are coming, Jay Powell guided for 2, but the market realistically thinks we're going to get 3, then they can price that in further than or earlier than it happens. It's just a question of that confidence remaining that we're actually going to get those cuts. Hood is a proxy on the market, so tomorrow looks green. Yeah, I mean, based on overnight sessions, definitely tomorrow looks more green than not. Ask Grok to pick a put option on Nvidia that would pay out the highest premium without me having to buy the shares. It picked $90 strike expiring December. I was amazed. Yeah, it's pretty incredible, dude. Grok is getting good. It's also getting good at sports betting. Steve is asking Grok, like, hey, which team should I bet on in whatever game? And it's like, yeah, it's actually been right a couple times by giving him the right answer. So yeah, I mean, it's getting good, dude. AI is getting very, very good. And eventually, this is the whole concept of robo advising, which I don't know if Robin is going to introduce that in their gold event. Like, the back of my head says it's going to be an AI announcement, but the other part of my head thinks it's going to be more of a banking announcement, because they did say back in the investor day, and I was there in person listening to them say this, but the chief credit officer said, hey, going into our next gold event, we're going to have an offer that's as cool as 3% cash back on the credit card, but in a different part of banking for Robinhood. Maybe that's what the gold event is dedicated to. Maybe it's not dedicated to AI. And if that is the case, I really wonder what Robinhood's going to put out, because if they put out something special in banking, then they're not a bank, it's going to be nice to see what they do. I did put out a poll over the weekend. I've always wanted to ask this poll, but I never got the chance to do it, so I did it on Saturday, which is Robinhood or SoFi. Which one would you hold for the long term? We got 21,000 votes, about 22,000. 70%, 68.1% said they'd rather hold Hood. Some people are saying this is biased because this is my account and I talk about Robinhood a lot. I don't think that's true, dude. I mean, yes, is there some bias baked into this because it's my account? Sure. But I think the execution that Hood has proved over the past 365 days has made it very obvious that you would rather hold something that is constantly innovating over something that's not even allowing you to sell covered calls on their platform, right? So I just think this is obvious. I don't think this is really a result of my following being biased to an extent, yeah. But I think a lot of accounts could ask the same question. They're going to get Hood over SoFi. So right now, look, maybe this is a bullish thing for SoFi. Maybe sentiment on SoFi is so crappy that this poll reflects buying SoFi here over Hood. And maybe that'll work. And I have my SoFi options. I hope SoFi hits 20 by the end of the year. I think that's still realistic. But I do think when it comes to a decade-long hold, you got to trust management to innovate in fintech. The lifeline of fintech is being able to ship new products. We're seeing this with PayPal. PayPal's been just decimated, even though they're buying back damn near 30% of the company, the float, but no one's buying it because no one believes that PayPal's innovating anymore. And they believe that competition's taking a lot of their lunch in the payment sector. So Steve had a really good take on this. Steve says they could cut the buyback in half and then issue a dividend, and you would get about a 2% yield on PayPal. That would make a much more compelling reason to buy PayPal because it's a fundamentally good company. It's not dying or anything like that. It's just not growing as much as before. You still got a ton of buybacks and you get a dividend, because the buybacks are only special insofar as you get more capital appreciation, especially if they're doing buybacks at such an excessive scale, but they're not doing it at they're not getting the share appreciation even with the excessive scale because every time they buy back the stock, there's enough people to sell it into that strength. So, maybe the dividend is the better option for something like a PayPal. But my point is you just got to innovate. And when it comes to Hood and SoFi, I just think Hood is pushing it at a higher level. Is there a reason to buy both? Yeah. If you're bullish next gen millennial financial services, I think there's a reason to buy both. I'm not against buying both at all. I was just really curious when push comes to shove, if you had to choose between one or the other, which would it be? And it seems like at least 70% said they'd rather pick Hood. Amit, do you believe any pump before April 2nd is a fake pump, or do you think the dip is done? If you think this, how would you explain why the dip happened in the first place? Well, the dip happened because of, I would say two things. Number one, the insane levels of back and forth around a policy that would have massive implications for the broader market that have not been clearly defined, or the variables of that policy have not been clearly defined, aka tariffs, right? So I think that's why we started becoming as volatile as we got, because the market thought it would happen one way, and then Trump had 17 different delays, and then he's on the phone with the Canadian Prime Minister and all this stuff, and then Canada, Justin Trudeau does a press conference saying we're going to tax the Americans. So I think all of that created the first logical foundation behind this, you could say 10% correction that we had in the S&P. The second reason I think multiples got exaggerated, and it's easy for me to say this now. Hindsight is always 2020, but Palantir 125, Robinhood at 65. I mean, things got exaggerated. Reddit was at 250 or 230 at one point. And so it's funny because at the time we all knew those things were expensive. I don't think anyone was saying, oh, Reddit's cheap or Palantir's cheap or Robinhood's cheap. We were saying, well, momentum is momentum, and momentum just turned. And then you had multiple compression. So why would the market get back to those levels? Well, I don't think there's that great of a reason for the market to get back to those levels. Right? I don't think the market, it's that easy to be like, oh, well, now we have that little kerfuffle and Palantir should go back to 125. It's I don't know. I don't think it has to. I don't think Hood has to go to 65. I don't think Bitcoin has to go back to 109,000. I just hope it doesn't have to go much lower than the lows that it was at a couple weeks ago. But I don't think it has to go back to those levels. And I think a healthy period of consolidation in this range, which is already up a decent chunk from the 10% low that we had 2 weeks ago, would be nice. And then after Q1 earnings, if Q1 earnings are good, which hopefully are good, definitely will be good across big tech, and hopefully the consumer stocks also print some good earnings. I mean, Carnival Cruise had a decent one on Friday. That can give the market the next excuse to go up a leg higher, which is also good because we got a lot of the froth. We got a lot of the froth out of the market. Trump coin, the fact that fell 90%, that's good, right? We got a lot of the froth out of the market, even if it required the S&P falling down 10%. But I do agree with Basent on this. Robinhood right here, 45.85. Basent says, hey, we could have avoided 2008 if we just paused the brakes on 2006, 2007 and tried to make sense of some of the pain that was going on and had a detox before we had this subprime mortgage crisis get to the point to where it got to. So the crisis right now that we have is not necessarily subprime, but it's our debt which we're paying $1 trillion of interest on. Like, we have to deal with that to an extent in order to justify some of these valuations. And I think dealing with it right now is better than dealing with it 5 years from now. Having said that, Palantir 93 after, I mean, can we get back to 100? Can we hold that range? Can we stay within 85 to 100? I don't know. Palantir is also a different one because Palantir is a unicorn. Palantir is a unicorn. We had a nice long discussion. Let's talk a little bit about Palantir. We had a nice discussion on Palantir Weekly, a good, healthy debate, in my opinion, for anyone who watched it, on the valuation. And you had Steve and Matt take one side that's saying, look, obviously it is fundamentally overvalued, even though we love the company. And you had Arnie actually try to defend the current state of the valuation, saying, hey, $90 is fair value. And Arnie's core argument was that, look, Intel failed to execute when they were the big semiconductor stock 5-7 years ago, and NVIDIA and AMD ate their lunch because NVIDIA and AMD were fundamentally more creative. They were more focused on the long-term future. Intel ended up not going down that route, and that's why NVIDIA is where it is today, and Intel is where it is today. And he's making that same argument with Salesforce and Palantir, right? Because Steve was using Salesforce as kind of his core argument, and Arnie was like, well, Salesforce is not really innovating for the future. They're not really establishing what they're going to be like 10 years from now, which is why the market's paying a multiple on Palantir. Now, granted, one nuance to that argument is that Salesforce is growing, even if it's not growing top line, it's growing its EBITDA, it's growing its net income, it's growing its free cash flow at a very healthy rate for a company that's at the size that it's at. Intel was flat for 5 years when NVIDIA ended up superseding it in terms of their net income. So that is the nuance to the example. But it's really just a question of, like, do you think the market deserves to be paying 80 times price to sales on a multiple for Palantir based on Palantir's opportunity to conquer this, what many would say, infinite TAM that exists in the government and commercial space? And as of now, the market has not said they don't deserve to pay that. I mean, really, what's the max pain we got on Palantir over this whole correction? 71.77. I mean, even at 71.77, dude, like the multiple right now is 74 on price of sales. At 71, it was probably 54, which is still massive, dude. The average price of sales on a SaaS company is like maybe 12. So whether it's 74 or 54, I mean, you're paying an egregious multiple. But if max pain was 71 on Palantir, to me, that's bullish. And then, not to say Palantir is going back to 130, but to me, that's the market saying, okay, even with all of the volatility, we only took it down into the very low 70s. Now, granted, Q1 has to crush, like really crush, to be able to even sustain this multiple. But that's the part that I have the least doubt in my mind for. Like, the biggest concern I have is, like, is the multiple sustainable based on macro events? Not is Palantir going to execute. I fully believe Q1 is going to be a big daddy quarter with well above 30% growth. Margins are going to increase again. Free cash flow margins are going to be great. Operating margins are going to be great. I think they're going to keep beating on some of these metrics, even though it's insane to imagine they have better operating margins than what they have for the past couple quarters, but they've been beating it every single quarter for the past 7 quarters. They're now at 41% operating margins. Imagine that number gets to 44, 45%. Like, I think Q1 is going to be great, but we're going to have to see if this multiple can sustain it, even with having a good Q1. But yeah, it was a good debate. It was a good, healthy debate that we had. Okay, cool. What else do we have? So we talked about Palantir. We talked about Tesla. Let's go through a couple of charts. So this week, what are we looking at in terms of some of the macro? Nothing too crazy. We have new home sales, consumer confidence. Consumer confidence actually is going to be an important one because the last one we got was pretty crappy. So this one's going to be important to take a look at. We are also going to have mortgage applications, and those have been starting to trend higher. So hopefully we continue to get more demand for mortgage applications. We have new and continuing claims, and we have personal income and PCE, personal spending, as well, coming in on Friday, which is going to be important. Here's another chart right here. 5 years ago today, March 23rd, the S&P 500 bottomed after a 34% bear market due to shutting down the economy. This was because of COVID. The S&P 500 was nearly up 200% earlier this year off those lows. And Ryan Dietrich right here kind of getting people to remember that when it feels the worst, you tend to get a little bit more sunshine after all that pain. Now, we haven't gone through a COVID level correction. I mean, even reading this 34% bear market, I was in college at the time. I had some money in the markets, maybe like, I don't know, 15,000, something like that, my senior year. So I mean, I felt the pain, but I don't remember it being a 34% bear market in March. But like for those that were actively looking at the markets every single day, it must have been horrible. But like I wasn't really even watching CNBC at that time, right? So I didn't really know what was happening. I just knew COVID sucked and I didn't have to go back to school forever. But it was bad. And 5 years later, you have massive earnings, you have an AI revolution, you have ChatGPT, you have all these different verticals, humanoid robots, NVIDIA has become NVIDIA. Everything has expanded. Crypto economy has become so much more stronger. And so I think the fundamentals of this market are a lot more intact than what they were back in 2020, especially when we had zero interest rates. I mean, companies are putting up earnings in a cycle where rates are still relatively high compared to where they were in 2020. And so I think the fundamentals of this market just feel a lot better than 2020. But the volatility, who knows, might be even more given Trump is back in office. Did you already close the hood debit spread 95-100 to buy 55.70 for Jan 2027? No, I bought more 55.70s. So I still have my 9500s. I have a lot of them, bro. I have like 560 of them. So I've just been DCAing into those. My average cost on that is 63 cents. And then I only bought 25 of the 55.70s. I looked at the 55.70s on Friday and I was like, this is like cheap. Like if we think Robinhood will be 70 by January 2027, the 95-100 is more of a lotto. Like it really has to outperform. But $70, I think, just given their current earnings estimates, should be achievable. And I bought 25 of those at like $3.30 a pop. But if you can get the spread to close for like 15, 14.50 in 2 years, then that's a 4x. Not too bad. So yeah, I think if anyone wants to get into hood spreads, 55.70 is way better than 95-100 because you're taking on less risk. You're getting a little bit less of a return. It's not as asymmetric, but I mean, it's still a decent return given Robinhood has had this 30% collapse. Bitcoin 86.5. That should be good for a hoodie, which is now at 45.95. Tesla's up 2%, Marathon's up 3%, Riot's up 4%, Coinbase is up 2%. MSTR should be pumping. That's up 4%. And you got Bitcoin trying to take off again. Why is Bitcoin taking off? Does anyone have an idea? Because I don't, but Bitcoin's taking off. Any thoughts on Red Cat? So I posted the Red Cat interview. I don't own the stock. I don't own Archer as well. I think those are amazing companies, and I really appreciated interviewing their CEOs. But in this environment, I'm the more speculative names. So I don't own Red Cat, don't own Archer, but I thought it was a great interview with Jeff, and that's on my Twitter and on my YouTube for anyone who wants to check it out. But he's awesome. He's super, super cool. I'm going to try to get him on the channel as well, just to kind of explain a little bit more of his story. But yeah, I do not own either Archer or Red Cat. Robinhood right here at 3.2%. Palantir, are we still holding 93? GameStop's up 2.3. Palantir, wow, 93.4. Dude, if Palantir gets back, if Palantir gets back to 125 somehow this year, and it like sustains those levels, even with a crappy macro, I don't know how that happens, but let's say it does. What a fucking stock, dude. What a fucking, if it actually, like, usually you don't make it back to that near-term top that easily. But then again, Palantir is a different animal. Palantir is a different freaking animal. And I'm not saying it would be cheap if it gets there. It's not cheap here, but goodness, if it can get there, that would be amazing. So we'll see. We'll see over the coming days if that can happen. Amit, can you explain the process of spreads? So Jason and I will be talking more about call debit spreads on options 301. We did options 201 over the weekend for those that checked it out. Hopefully, it was definitely more technical, but if you watched 101, then 201 should make more sense. We went a lot deeper into theta, delta, gamma, vega, like what it means to even think of pricing and then buying or selling an option, and what not only your psychology should be, but what numbers you need to have predefined, like intrinsic value, extrinsic value, etc., in order to come to the conclusion that this is the right option to sell or buy. So I thought it was hopefully very helpful. And we'll do call debit spreads in the future. In a nutshell, again, a call debit spread is you're just hedging your call, right? So when you buy a call, you are buying the right, not the obligation to own 100 shares in the future. When you're selling a call, you're buying the right to sell those shares in the future. And so when you buy a call and sell a call on top of each other, you're paying a premium to buy the call. But when you sell a call, a covered call, you get premium. In this case, you don't have 100 shares to cover the call. So you're buying a call. That call is acting as the 100 shares because it represents technically 100 shares. So that bought call is covering your sold call, which is what you would typically have 100 shares for. So the premium that you paid to buy the call minus the premium you get from selling the call creates a spread. So in the case of Robinhood, 70 minus 55, those are my two strikes, would be $15. The spread between the premium I pay versus the premium I get is basically $3, right? I paid like $3.30 for it. And so when you divide 15 by, let's just call it 3 to make it simple, you get a 500% return, a 5x return if Robinhood gets to $70 by your expiration, which in this case would be January 2027. So I'm like 2 years for Hood to get to 70. I don't think that's crazy, dude. And I don't think 100 is crazy either, but I know 100 is a lot more aggressive. So let's say it doesn't happen. So if you don't want to bet on the hundreds, then 55, 70s are not horrible, in my opinion. But again, it really does depend on the market holding up. And if the market takes a shit, Robinhood's taking a shit with it. Same thing with Bitcoin. So those are still the active risks to deal with when it comes to it. Yeah, it's essentially a poor man's covered call, but people use the poor man's covered call to generate income. So for example, the difference here is that if I sell a Tesla call for $500 in 2026, right? I buy a Tesla call for $500 in 2027. So I'm buying a long dated call. And then I sell a Tesla 350 for April 25th. And some crackhead is going to be paying me a juicy level of premium because they think Tesla's going to 350 by April 25th. Maybe it does, but I would say right now that's a little aggressive. And you can clip this when I'm wrong, when Tesla's 350 on April 25th. But the point is, I can use that long dated call that is a $500 strike way out into the future, and I can sell a short-term call against it and generate income. The call debit spread is not really for income. The call debit spread is to create a spread between the two options to then be able to hedge if the position goes against you, because the sold call appreciates when the stock goes down, and then eventually give it time for the stock to get to your level, and then you make the difference within the spread, hopefully a multi-bagger in this case, 3 to 4 or 5x. But the poor man's covered call is more so to generate income, and you're using that way out in the distance call to be able to create leverage to sell a call in the short term, which also is very capital efficient if you don't want to buy the stock in and of itself. But the reason a lot of people do it is because these Tesla, let's just go to Tesla right now. Let's go to that exact strike I said. So Tesla 350, April 25th. I just said that off the top of my head. Tesla right here, 254. April 25th, 350. Someone's willing to pay you $175 to buy that call. So if you have 100 shares that you buy even right now at 250, 175 divided by 25,000, 250 times 100, that is still a 0.7% return. Less than 1% in a month off of basically assuming Tesla's not going to go up by 40%, which would be a bit aggressive in a month, in my opinion, right? This is why covered calls are so cool, because you got some people willing to pay these crazy prices. And I don't think 350 is that aggressive as a strike, which means you might be able to make some money off that. Elaine says right here, I sold some covered calls at 100. I may lose some shares. So if Palantir goes to 100, she loses some shares, but if it doesn't, she gets to collect that premium. And worst case, if she really does lose some shares at 100, are you really going to get that upset, right? Like, this is why I love selling options versus buying options, because if the stock doesn't get in the direction you need to get to, you lose all your money. But if you sell a call and you just happen to get your shares called away, it's just not the worst thing in the world, even if you have to part with some of your shares. Cool. So we talked about that. Okay, here's another thing I wanted to show you guys. This was Besant recently on the idea of if we're going to have a recession or not. Here's a 1-minute clip on that.
Story. The other day, you were asked a question by another outlet. Can you guarantee that we're not going to have a recession? And you wanted to address that this morning.
Yeah, well, look, it was a silly question. Can you guarantee there's not going to be a recession? I can't guarantee anything. I can't guarantee that the journalist who asked me the question that her news program is going to be on in a year. But what I can guarantee you is that there is no reason we need to have a recession. I think that there's the economy in the first quarter is doing better than the media is reporting. I think we're seeing some very good underlying data from credit card companies, from banks. I think that the airlines, which reported some bad passenger numbers. A big amount of that is from federal employees who are not flying right now. So the underlying economy is healthy.
Story. The other day, you were asked a question.
So you got Besant saying right there again, we're probably not going to get some massive, epic economic collapse, but we are going to see a little bit of pain. And his argument, very similar. The reason I want to play that clip is because a lot of people were saying, oh, the airlines are struggling. That's bad for consumer confidence. I made that argument as well. Besant's argument, and we'll find out if this is true or not over time, is that that's because federal employees aren't flying as much anymore because we're cutting a ton of jobs in the government. So if that's the case, we have to really look at some of these other consumer companies that are going to have earnings soon and see if they're saying the same thing that Delta and United are saying. Because if they're not, maybe it is a government thing on airline travel versus a consumer thing. Again, I'm very skeptical on that. I feel like it's more of a consumer thing, just looking at consumer confidence. But that is Besant's argument for what we're dealing with. What we're dealing with right now. So he's pretty confident we don't get a recession. So is Trump. So is Lutnick. I guess we're going to see if that ends up playing out. A couple more things on Tesla, and then I think we'll be done for the day. So right here, these are all the price targets, buy and sells that we have on Tessie. You got a lot of these price targets that were well into the 500s, coming way back down into the low 400s or mid 300s. So you do have more buys than sells, but you have some splits on those buys. Some cut their targets to 120. Others have retained them at 400, even though they're down from their 550 highs that they were at. I think Dan Ives is the only one who really hasn't changed it. He kept it at 515 and it's staying there. And this is another thing that started trending over the weekend. How to buy Tesla stock, the interest over time on Google Trends has started to go much higher. So you just have more interest on buying Tesla or getting into the world of Tesla that is starting to peak up in terms of excitement. If I look at this 30-day chart right here on Google Trends, how to buy Tesla stock, you're starting to see a lot more momentum. I mean, it was at 100 for the first time in a while on March 22nd. That was a couple of days ago. So this is interesting because you got some people that kind of are against this whole anti-Elon protesting, yada, yada, and they want to buy Tesla stock in support. But you also have other people. I mean, let's do how to short Tesla. How to short Tesla. Let's see if those searches went up. You have other people on the opposite side. Yeah, look at that. That's hilarious, bro. So how to buy Tesla was ranked number 100 in Google Trends, which is the highest it can rank for on March 22nd. How to short Tesla stock was ranked 100 on March 19th. Look at that. So it might be net, right? You might have some people buy, some people sell, and it ends up evening it out. But you definitely have a very polarized group in the country when it comes to Tesla. What's your personal price target for Tesla stock, Mid? I don't think I have a price target for Tesla. I don't think I've ever had a price target for Tesla. I do think, look, long term, I think 250 is going to be stupid when it's at 600. Everyone's going to be wondering why they didn't buy at 250. But in the short term, can it hold 250? I don't know, bro. I really don't. I want to say yes because sentiment has bottomed, but even with sentiment bottoming, the multiple you're paying on earnings for no growth, which Tesla's just not showing any growth. Maybe Q1 changes that, but from what it's looking like, it's not going to show growth. It's just aggressive. It's really aggressive. I don't even care about the brand damage and all this stuff. That's not even, I'm just thinking like the street doesn't care about robotaxis or Optimus because it's not here yet. They care about auto numbers. I don't even think the street cares that much about brand damage either. They just care about auto numbers. Now, if brand damage is causing auto number damages, then yeah, there's a correlation there. But just the pure numbers on Q1 are not going to be pretty. And as a result, yeah, I don't know if it can hold 250 as easily. Also, if we tariff cars, like, and tariff all the supplies in cars, which is Tesla uses a lot of raw materials from across the world, even if they manufacture the cars in the United States. I mean, that's also something that I think we have to take into effect going into April 2nd. Turkey did ban short selling as well. This headline came out this morning. I guess Turkey's stock market is suffering from a massive short selling attack. And so Turkey banned it. I didn't necessarily know you could do this, but South Korea did do this a couple times before. So yeah, I think even the United States, we've done it to an extent. It's never been a full-on flat ban of short selling, but yeah, if you try to short something in Turkey, you're not going to be able to do that. Shout out to 30 and a wake up, loving my new Model Y. I actually saw that picture online. He was rocking the Rocket Lab hat right there. So there you go. This is Mr. 30 and a wake up with the Rocket Lab hat and a red new Model Y. It's not the Juniper one, but it is a red on white. I love that you got the white interior. I love it. Dude, people hate on the white interior, but it's amazing. I love the white interior. The white interior is legit. I love it. So there you go. Again, but see, this is where I'm torn on Tesla as well, because I'm like, okay, I know Q1 numbers are going to suck, but then we're seeing all this inventory, Model Y, Juniper sold out in all these different states. Like, are they actually going to deliver on deliveries at a level that none of us are thinking about? Or are these deliveries going to be factored into the next quarter's deliveries and it's not really for Q1? Like, I don't really know how to make sense of it in a very definitive way. But regardless, I still think Q1 numbers are not going to be the best, even if deliveries are a bit better than expected. I think we get deliveries in 2 weeks, and that'll really set the stage for what Q1 looks like. I think expectations have gone down a little bit below 400,000. So we're going to have to see how that plays out. I'm confused a bit. Doesn't everyone say they buy Tesla not because of their cars? So why do number deliveries matter? Well, yeah, no, it's a good point. I would think number deliveries only matter in the short term, right? Because at the end of the day, we've seen Tesla react very negatively towards crappy auto numbers, even if the story is everything besides auto. But in the short term, like, especially when things get volatile, it becomes an auto company. As much as Elon, has made the case for why it shouldn't be. And he's right. I think it shouldn't be valued as an auto company, but when things are tough, it becomes valued like that. So yeah, I think people are just more concerned about entry price here. But look, let me say this. If Tesla makes a run to 300 and we go up another, that would be what, 20%? I think the chasing is going to be dramatic. I think there's going to be a lot of people that say, screw it. It's Tesla, robots, blah, blah, blah. All those things start getting back into focus. But they've got to get through Q1 without collapsing. And if they do, I think 2025 is going to be great, because if they can get through Q1 and the market doesn't care anymore about this, and they've like valued them definitively more than a car company, even after crappy car numbers, then maybe we go much higher. 255.5 on Tesla, up 2.73% right now. Is your Tesla the fastest car you have driven? Yes. And I scared my cousin when I went from 0 to 60 in like 5 seconds. That when I was picking her up from the airport. But it's so much fun, dude. It's so much fun. Like, I love that Tesla, bro. And I love it more with self-driving. I love it with self-driving. I literally all the way back from the airport, dude, 40 minutes. I just got to talk to her. I got just like think about that. Think about the ability to have a conversation with a loved one and not have to worry about driving, because the car is driving you and you can focus more on the conversation, which is what matters in life, right? The relationships, the moments, than picking which exit and making sure I know I'm going the speed limit, all that stuff. Like, I know maybe it sounds simplistic, but really it is an experience where it just opens up more freedom in your life. And I just can't get enough of it. So I think it's just opening up more and more opportunities, and it's the future, in my opinion, inevitably. Even if that future is dominated by more than just Tesla when it comes to this. Okay, I think to end it out, let's actually get a little bit of content right here from BG2. They talked about tariffs over the weekend, and I think there's a couple of core points they made that were really interesting on tariffs. So let me pull this up right here. We'll listen to about 4 or 5 minutes of it, and then we'll end it off and get their perspective on where we think the markets are going because of these tariffs. Walter White says, I code, drink, and drive at the same time. Speaking of Walter White, my cousin just got done watching Breaking Bad for the second time. I introduced it to her 2 summers ago, and she got hooked. And so she watched it again by herself the second time. I've watched Breaking Bad, I think. Oh, you guys will be proud of me. I didn't even mention the biggest news of the day. Your boy watched the show. All right, let's do this. You guys guess. What show did I watch? And then we'll watch the tariffs clip. What show do you think I watched? Basically 3 episodes of a show. Now, I slept through the 3rd episode, but that's my fault. That's not the show's fault. But I just got tired and I slept through it. My sister got more hooked on the show than I did. But I watched the show. And look, this is a show that's supposed to be like one of the best shows. First 2 episodes were really slow. I'm still hanging in there. I'm waiting, for the real juice to start, but I'm hanging in. I know everyone's saying it's like the next big thing, and I would agree. The concept is amazing. First 2 episodes were slow, though. Your boy definitely had his phone with him when he was watching episode 1. Watching, quote unquote, I was listening to more of it than watching. Okay, it was not Game of Thrones. You guys are wild, bro. I'm not going back to the medieval times. Not White Lotus. Not Will and Grace. Even though, we don't talk about 2.5 Men being one of the best shows of all time. This is something Steve and I agreed on. We didn't talk about it on the market close on Friday, but 2.5 Men, one of the best shows of all time. Unfortunately, it's not available on streaming. It's on freaking Peacock. Why does Peacock exist, bro? Why is Peacock a thing? Like Peacock should just like die and give all the good shows to their actual stream. Like, who's buying Peacock? But I want to start 2.5 Men again because it was one of the best shows ever. Okay, it was Severance. So I started it. Look, it's slow. First 2 episodes are freaking slow. Okay, it's slow. Like, it's really slow. But I read a couple of reviews on it last night, and everyone's saying it quite literally could be the best TV show of all time. So I gave that credence, and I said, all right, I'm gonna take a chance on it. I'm not completely zoned out yet, but it was slow. So I get the basic premise of the show. I understand it. And now I'm like gonna try to keep watching it. Yeah, Uzi says it gets good. I am just waiting for it to really blow my socks off. I know they have to do the stupid character development and all that stuff in the first 2 episodes, but yeah, I'm on the Severance bandwagon. And I know, see, all of you guys say you love it so much. I know every review I've read said it is the best show of all time, or it has a chance to become. It got renewed for season 3 already. So I'm giving it a real chance, and I'm gonna keep watching it. But yeah, Severance, I officially started it. So there you go. All right, let's hear from Brad Gerstner on some tariff stuff, and then we'll close it out for today.
I think that we haven't had a clearing event. We're going to have reciprocal and sectoral tariffs announced on April 2nd. And so the market is in this churning back and forth, waiting and seeing, trying to figure out if this tips the economy into a negative light. But I will just say, so what's the positive on here? I would say 2 big positives, or maybe 3 big positives. Number one, first, Bessent said that he's seeing data points from credit card data and bank data that the consumer's really not slowing down. Moynihan from Bank of America was on CNBC this morning and said that consumer credit growth and bank expenditures from Bank of America were actually up 6% year over year, had not slowed down, despite the fact that they're getting a little bit more concerned about the economy. So that the real-time data does not look that bad to me. Secondly, I think that when I talk to managers, and I've talked to a lot of long only and hedge fund managers over the last couple of weeks, they're all in their bottom quartile of exposures, Bill. So they all kind of heeded the warning of the market, said, I'm going to get out of the way here for a while. But interestingly enough, they all believe that the back half of the year, next year, is going to be really great. And so there's this, volume dial where they've all turned down the volume dial a little bit, but they all kind of want to get back in before this plays through. So that's the question. Are we in for another 5 to 10% leg down, right? Can we find a bottom for the market, or are we, are we going to get a clearing event? And I think it's too early to know.
How do you square your airline data with those other data points?
Yeah, they asked that question to Moynihan this morning on CNBC. They said, how can consumer spending, be good if the airline data is ticking down?
Yeah, this is something I'm confused about as well. I don't necessarily know how to make sense of it.
And he said they just shift their spending. So they're spending on local entertainment, and
that's a little bit of a cop-out. That's what a bank CEO is supposed to say. Maybe he's right about it, but it sounds more like a cop-out.
Restaurants, et cetera, and they're, the bigger ticket items are turning down. He said, but in the wash, and they're looking at 1.5 trillion of consumer spending per quarter. He said in the wash, it's up 6% year over year. So again, I think, when you think about the Fed's median forecast, those are forward-looking forecasts. So I think what a lot of people are saying is the data at right now is, there's a little bit that's mixed, but most of the data, the consumer's still holding up. But I will tell you, talking to CEOs are absolutely more on hold today than they were before. They want to see what these April 2nd tariffs bring before they make big decisions.
And do you have any insight into that or a perspective on where that lands? Because obviously everyone's talking about this, but there's a big question as to whether Trump's negotiating or not. And so will the will the bark be worse than the bite, and does what lands is simpler and less disruptive than maybe what was broadcast at the beginning?
Well, so I have two strong points of view on that. One is, this is not a negotiating tactic by Trump. I think that diminishes the administration's principled approach to restructuring globalism. I mean, you really have to listen to the speech that Vance gave yesterday.
I did.
Like,
I did.
whether
I did.
whether it's Bessent, whether it's Howard Lutnick, whether it's like, they have a fundamental view that the middle class was hollowed out by, effectively sending all of this labor offshore. They want to reindustrialize America. And so, like, this is not just a negotiation to try.
So I know Gerstner's saying this is a philosophical view that the administration has, and I think if you listen to Trump or Lutnick or Bessent speak, like, he's right. This is a whole new global paradigm they're embracing. The problem is the practicality of that paradigm, aka Americans manufacturing things to sell in America. I don't know how easy it is to believe that paradigm materializes to reality, which is why I still default on no, the tariffs are negotiating. Gerstner saying it's about Trump's like philosophical premise towards reindustrializing America. I say, yeah, maybe like 20%, but the other 80% feels more like negotiations, because the ability to meaningfully get America to revitalize itself and manufacture here, it feels like that's going to cause a lot of disruption in order to make that happen. Now, maybe that is how it plays out, but I guess April 2nd, we will officially know if it was a real paradigm or if it was just negotiating.
Try to get a little bit more in that light, Bill. When you think about the tariffs coming on April 2nd, they have said there's about 15 countries. They're going to outline country by country what they call them. I think I heard Bessent call them the terrible 15. Country by country, the trade and the non-trade barriers, and what that totals. Right? Is it 1 trillion? Is it 2 trillion? They expect a lot of those countries to come to the table. They said some of them have already come preemptively to try to cut a deal. Some of them will come after the fact to try to cut a deal. I don't see, like, if on April 2nd we're going to lay this out, I don't see how that can be the end. It feels like a lot closer to the beginning to me of a negotiation than it feels like the end of a negotiation. But I think, there are going to be a lot of things made clear. Like, one of the things we've talked about, are there going to be tariffs on semiconductors? There's a good argument not to tariff semiconductors because we're in an AI race. Why make it more expensive for U.S. companies? But at the same time, if you just look at, re-onshoring American manufacturing, you would probably say we need to put some tariffs on the import of semiconductors to incentivize the domestic building of semiconductor manufacturing supply chain.
Yeah, I will tell you, for what it's worth, and I'm always open to changing my mind later, and would love, perhaps to be proven wrong so that I could adopt a different perspective. But I remain, based on all the learning I've done to this point in my life, a big believer in comparative advantage. And I also think that there are people around the globe that want to work harder for less money than people in America do. And they have the ability to improve their life on a percentage basis from a standard of living or that kind of thing, a wellness perspective, more than someone would here for the same marginal effort. And I think because of that, water runs downhill, and that's where those jobs want to go. And pulling up the wall. I mean, I've said some of this stuff before, but pulling up the wall, I don't think it's going to work. I don't think there's anybody that wants to build a $40 microwave in America. And I look at the, competition in the auto market, where China now has 35% of the global market. And they're producing better cars faster. Does anyone really expect GM and Ford to reorient themselves overnight? And I don't even think they could, because of the presence of the labor unions. So I don't know. And you and I have talked about Morris Chang's comments about, why he went from Texas Instruments to Taiwan. And we're, I guess one day maybe we get to full automation, and that's a completely different world. But even if that's what you're encouraging in the US, it doesn't bring the employment back. It just brings automation here, which has some value.
Basically, Bill Gurley is giving the exact opposite take of Gerstner, and he's using the same arguments that we've been throwing around for a while, which is that cost of goods, automation, yada, yada. Like, basically, Gerstner is giving the paradigmatic philosophical approach to tariffs, and Gurley's coming in with reality and saying, yeah, but like, realistically, could this actually play out?
But that's the part that I think is a little between JD's two main points. One of them, like, vilified the loss of jobs, but I don't think the approach brings the jobs back. He's talking mostly about innovation and was a little derogatory towards cheap labor, which I don't think is the appropriate way to look at people that are trying to, hustle their way up the ladder.
Well, all right, there you go. If you guys want to watch the full video right here, 16 minutes and 50 seconds. That's the timestamp if you want to continue. But you can check that out there. I think it's a good debate, and I think I side with Gurley on this. I side with Gurley. I like Gerstner. I think he's a really, really smart guy, and I look up to him a lot. But I side with Gurley on this. Like, I'm not seeing the practical argument for how we are going to bring all this manufacturing back to the United States and how it's going to massively increase our GDP, our cost of goods, all that stuff. Like, I think in some sectors it can, but in a lot of other sectors it can't. One stat I found out today, which was actually really interesting, is that the majority of our GDP in the United States, and I mean, this shouldn't be that much of a surprise to anyone, but it's services. It's not manufacturing. And when you take this stat a step further and you look at all developed countries, like countries that have had a level of economic security and wealth and freedom over the past 100 years, you see a trend where most of those societies go from manufacturing-based societies to service-based societies. Why? Well, when you start making some money, you want to go get your nails done, right? And you're willing to pay $30 for a manicure. That's a service. You want to go out to eat to Texas Roadhouse, and you want to get a medium well, not rare, medium well steak, and you're willing to pay a little bit for that. That's a service. So like, as societies develop, more services pop up, and that's good, right? Because services jobs are theoretically much better than hardcore manufacturing jobs. So to take America back to a more manufacturing-based society, in some elements, I think that is good, but in a lot of other elements, it feels antithetical to the general trend of developed economies that tend to shift to services over manufacturing as the average income per capita starts to grow. So we're going to have to see how the Trump administration ultimately plays out their tariff policy approach. Someone says that's a mistake. That's a good one. That's a good joke. It's a good joke, but but it's not a mistake. It is a good steak. I'm getting roasted for this right now on Twitter. I haven't even looked at the comments. Farzad is making steaks today, and I told him, bro, go to medium well. Yeah, see, look at this. Look, I haven't even clicked on the comments, and I can tell I'm going to get roasted in all of them. Look at this shit. Look at this. 91 replies. I haven't even clicked on this yet, and I can tell I'm about to get roasted. I stand by my approach, though. I stand by my approach. It is medium freaking rare. I mean, medium well. Okay, let's read the comments. Let's see what people are saying. What are people saying? What are people saying? All right, Farzad said I'm blocking you. Okay. Dividend Hero says literally selling all my Robinhood stock because of this post. See, people really don't get medium well, bro. They're propagandized into medium rare. Amit may have the hottest takes on this app. Someone says that's already cooked. Dustin says you misspelled rare. Professor X says medium well. I'm disappointed in you. You're sick. No one gets it, bro. No one gets it. You're right about most things. Not this, however. I think I trusted you with advice. Dude, this take is going to get, this is sarcasm, right? No, it's not sarcasm. Medium well. That's the way to do it. That's the way to do it. One day you guys will know. One day. One day. I was never saying well done. Okay. I was, to give me credit, I was never saying well done. I was always saying medium well. I just don't get how you guys like seeing all that pink, bro. I don't get it. Like, that's just like, no, bro. Like, I just want it to be cooked. That's all I'm asking. I just want it to be cooked. That's all. That's all I'm asking. What's the difference between medium well and well done? Well, well done is like too cooked. Medium well, it's like, it's cooked, but it's not like burnt. Well done is like burnt. And that's just too much. All right, cool. That's it for us for today. Phil, God didn't make cows rare so you could scorch them. Oh my gosh, dude. I like medium well. I had medium well again today. Tested my thesis again, and I was happy with it. All right, cool. So we'll be back tomorrow on the market open. It's gonna be a big week. We got some macro data. We do have that Robinhood event. That's gonna be important. I'm gonna be doing the market open on Tuesday. Not gonna be doing the market close on Tuesday because I'll be on a flight back to San Francisco again. But hopefully Tanner and Roy wake up at 5:45 on Wednesday to do the market open with me. I wouldn't blame them if they sleep in, but we're all going to be at the same hotel. So if I get them to wake up, they'll do the market open with me. If not, we'll probably stream again, like after the event, but we'll try to get you guys some content from there. And then, yeah, I think that's pretty much it. Then we end out March and we hopefully make our way into a green April. Is the Toronto meetup confirmed? All right. So Toronto meetup is becoming more and more likely, in my opinion, for April. It's not confirmed yet, but it's becoming more and more likely. So I was looking at some logistics over the weekend, looking at flight prices. Again, don't hold me to this, but if I had to say tentative, I would say that April 18th-ish time. Oh, April 18th is Good Friday. So hold on. Is the stock market closed that day? Is the stock market closed on Good Friday? That would actually make that weekend work. Yeah, they're closed. Oh, okay. Maybe I come in Thursday night and then we have that week. But that's also Easter weekend though. So maybe that might not be the best weekend. Maybe people are too busy. We'll see, but probably mid-April. That's what I'm looking at. Now, maybe. It's a maybe. It's still a maybe. Something might have some April stuff come up. Right now, April looks completely free for me. So I think April it'll work. But yeah, I want to get back to the meetups. And so I know we missed March. March was just way too busy, but April we should get back to it. How's the apartment search going? Well, you guys, I got an agent. Someone hooked me up on X who his cousin does this for a living, specifically in the location that I'm looking for, which is that Northern Jersey location. And so, yeah, it looks like I have an agent now. And the reason I kind of wanted to get an agent, and hopefully this agent works out, Tesla, by the way, 255.6, is because I went to another apartment on Saturday, early morning, like 9:30. Everything was perfect. And then I was disappointed again by the view. And I was just like, I cannot keep doing this, bro. I don't have enough time to keep driving back and forth. I'm not driving, Tesla's driving, but still, I'm getting so annoyed by coming to these apartments and not getting exactly what I want. And I know that's part of the process, but if an agent can just get me the more specific choices that I'm looking for, so I don't have to weed them out myself, I'd be willing to pay for that, to be honest, because I just don't have the time to keep searching. So yes, Tesla is 255 after ours. Robinhood right here, 45.79. So hopefully it works out with the agent. And you know, based on the conversation I had with him on Saturday, he specializes specifically in this area, and so he knows a lot of different places and agents that he can communicate with. So hopefully, goal is still June, July to move out. We got to confirm a place probably by the end of April, early May, and if so, then we will be taking the bricks with us to a new location. Tesla right here, 255. PayPal's up 0.5%. Hoodie's up 3.22. And then Palantir still holding on to its momentum very nicely. 93.28 after hours, up about 2.5%. All right, cool. Thank you, everybody. That's it for me. I will see you guys tomorrow on the market open. We will keep March going, and hopefully we end it out to be as green as we can get it to be, and keep going from there. All right. Thank you, everybody. See you guys tomorrow on the market open. Bye, everyone.